Hi, everyone, and welcome to today's webinar, Sales Tax Returns 101. My name is Ashley, and I'll be your host for today's webinar. Today, we are covering common compliance hurdles, the complexity of return management, practical benefits, and how Avalara can help. Before we dive in, I just have a couple housekeeping items. First, a friendly reminder that Avalara cannot provide legal or tax advice. Next, on your screen is our safe harbor policy. Please take a moment to review that. We are recording today's event. If you want to listen to it again or share it with a colleague, you'll receive the recording later today. The console you're looking at can be customized. Feel free to move or resize the window. Slides can be resized by dragging the bottom corner, or you can download the PDF slide deck under Additional Resources. The Additional Resources section contains a lot of great related resources, including that slide deck. There are several ways to engage with our presenter and fellow attendees today. First, if you have any questions, please submit them using the Ask a Question box. We will try and save time at the end for Q&A. You may also submit your webinar troubleshooting questions there. Second, you can join our attendee group chat. You'll click the icon at the bottom of your screen with two chat bubbles, and the chat will pop up on the bottom. We encourage you to introduce yourself, network, and discuss today's topic. So drop in the chat where you're calling in from today. Third, you can react to the presentation by clicking the emoji icon and reacting. And then if you have any technical issues, there is a question mark icon at the bottom with suggestions, or you can reach out using the Ask a Question box, and I'll try and help you out. We are offering 1 CPE credit for today's presentation. For those looking to receive CPE credit, please note that we will ask you to respond to 3 of our 4 poll questions. The poll questions will pop up on your screen for a limited amount of time, so please make sure you're ready to answer them when the question appears. We recommend you do not split or tile screens on your computer, as this can affect the placement of the poll question. And our webinar platform may not work correctly on mobile, so please try and get to a desktop if you can. You must also attend the full 50-minute duration of this webinar. Once you have met those requirements, your certificate will be available to download in the Earn Certification box on your screen. You'll click the icon to access it, and it will pop up in a new tab. Or if you don't have time to download it during the webinar today, you will receive it in a post-event email. Unfortunately, we are unable to provide CPE credit to those who have technology issues that prevent you from qualifying. So if you do experience an issue, please reach out as soon as you can so we can document the issue. All right, let's meet our presenter. We are joined by Christine Martin, Senior Solution Consultant at Avalara. Christine, can you tell us a little about yourself?
I sure can. Thanks so much, Ashley. I'm Christine Martin. I'm a senior solutions consultant here at Avalara. I actually spent 15 years in industry as a tax manager at a large hotel firm, a telecommunications company, and a paper manufacturer. I have been at Avalara now 15 years, so I kind of bring this world of the functional side of state and local tax to the technology side of Avalara.
Great. Thanks, Christine. Thanks for being here. Before we get started, I do have our first CPE poll question. You should see that on your screen now. If you don't, try refreshing real quick. Our first question is, how does your business currently handle sales tax filings? We manage everything manually. We use some automation. We have a fully automated system, or I'm not sure. So take a moment to respond to that, and we'll look at the results together in a couple seconds.
I'm really curious to see the response on this one. I mean, when I started my career, we did everything manually. We had green bar paper that we would get reports and then manually key it into Lotus 123. That's kind of how old I am, Lotus 123. So I'm curious to see the results. Interesting.
Yeah, a good mix. Okay,
yeah.
Thanks for answering that first question. That's all I have for housekeeping, so I will pass it over to Christine to get us started.
All right, thanks, Ashley. Let's get started. Here's our agenda today. We've already gone through our welcome and our objectives. We're going to talk about the challenges of sales and use tax. So I wanted to start with the challenges of sales and use tax before we jump into the returns, because the returns are kind of a byproduct of the tax calculation piece. We're going to then spend some time talking about why filing these sales and use tax returns are hard. And then we'll talk about managed returns and actions and key takeaways from today's session that can help your business. And then we're going to hopefully have some time for Q&A at the very end. So let's get started on the challenges of sales and use tax. And if we think about why sales and use tax has so much focus on it, it's mainly because states look at sales and use tax for a good portion of their income. And this was back in 2014. In 2014, 47% of state income came from sales and use tax. So obviously, states are really keen to make sure that people are filing, that they're paying, because this impacts their schools, their roads, their government, everything about running a state government. But then, to me, the hardest part is really this nexus challenge. And we can certainly get to the Wayfair piece, because Wayfair really just threw everything for a loop. But if we talk about how the heck do I figure out whether I need to charge tax in a state? Forget about the taxability of things, but just where do I need to collect? Well, do you have property that you own, that you lease? Do you have people that are going in and providing service in a state, or in states like Colorado into cities? Do you have inventory sitting someplace? And I want to pause on the inventory piece for a second, because a lot of people are now selling through marketplaces like Amazon and participating in programs like Fulfilled by Amazon. And they think, oh, Amazon is taking care of all of that tax. I don't have to worry about it. But if you own this inventory that's sitting in an Amazon warehouse, that inventory is creating an obligation for you for the other part of your business. And the crazy part about this with Amazon and this program with Amazon is they can move your product to any of their warehouses without you even knowing. So sometimes people have created nexus for themselves simply by participating in a marketplace program where their inventory is sitting someplace. And most people forget about that. It could be that you're using affiliates, people that are working on your behalf, putting themselves out there. They're creating nexus for you as well. And then there's this lovely term, economic nexus, where I find it really interesting what had happened, and it makes sense. And what I tell people all the time is tax law changes slower than technology. So, and this economic nexus piece really brings that to light. So now all of these marketplaces and web stores, I mean, I live in Montana, so there's not a lot of shopping around me. So a lot of our shopping is done online, and states are looking for their piece of the pie and not wanting to rely on you and I as individuals to self-report sales tax. Thankfully, I'm in Montana, so there's no sales tax here. But this rise of economic nexus really put a broader focus on sales and use tax. People that only had an online web store, they ran it out of their house, but they made millions of dollars, now may have to charge sales and use tax in other states than their home state. So economic nexus really put a burden on some businesses to be able to comply. So let's talk about some nexus creating activities. So we've talked about owning and leasing property. Drop shipments could also create nexus for you. The inventory piece to me is very interesting. Collecting royalties, licenses, license fees, or commissions may also create nexus for you. It could be that you've got investors and you're having board meetings, and those board meetings may create nexus for you. And what I say to an awful lot of people is, it depends. Some people want a super firm, does this give me nexus? And my answer to most things every single day is, it depends. It depends on the state and it depends on the circumstances. But just looking at this, we can see that the reason for me, or the cause for me to calculate sales tax, is pretty broad and complex. And we haven't even gotten to the taxability and the tax return piece. And then with this Wayfair versus South Dakota versus Wayfair case, this rise of economic nexus came to be. And with the Supreme Court ruling in favor of South Dakota, a whole bunch of states had laws teed up so that they could then take advantage of this economic nexus as well. And I wouldn't have had a job as long as I have if every state did the exact same thing. So you could see on this slide that there are a number of states with different thresholds on when somebody has created economic nexus, but not just when they've created economic nexus, but what types of transactions are creating economic nexus. Some are looking at, I think of California. California says the sale of tangible personal property, taxable tangible personal property in their state is what they're looking at. Other states exclude exempt sales. Other states include exempt sales. So it's not as simple as saying, I've had $100,000 in sales in this state, I've created economic nexus. There are so many different circumstances in these states on whether or not your sales, exempt, non-taxable, whatever that may be, creates that economic nexus presence for you. So once we've gotten through this challenge of nexus and whether or not we've got a requirement to even charge tax, then we get into this other piece, which is the product taxability. And years ago, the Streamlined Sales Tax Organization was created way before this economic nexus. And it was a bunch of states getting together saying, how could we make more people voluntarily become taxpayers in our state? And their original thought was, well, why don't we streamline or make the definitions the same in each of our states? Then maybe it'll be easier for people and they'll become taxpayers. So they spent an awful long time talking about the definition of candy. So in a number of states, candy is all defined the same. And as odd as this is, Tootsie Rolls aren't necessarily considered candy because there's more flour than sugar. So these group of states that got together to form SST, they decided, let's streamline this, but that doesn't necessarily mean that they're taxing it the same or that they're taxing it at the same rate. It just means that the definition is the same. And we've got some examples out here on states that have some really interesting laws. So if we think about bagels, if they're sliced, they're taxed one way. If they're not sliced, they're taxed differently. Snow removal in the Midwest can be taxed differently in multiple states. So imagine selling a whole bunch of different items. Maybe you sell clothes online and clothing can be taxed differently in New York and Pennsylvania and Georgia. And how the heck do you keep up with all of that? And again, we haven't even gotten to the tax return piece, but just this challenge of understanding, hey, I've reached economic nexus because I've learned about this concept. Now, how do I charge the tax? How is my product taxable and at what rate? I mean, we've got Colorado up here. Anybody that does business in Colorado knows that Colorado is certainly a challenge. So now we've talked about nexus. We've talked about the product taxability challenge, but what about this jurisdiction assignment? And some people think, hey, I'm just going to use a zip code and that zip code will assign a jurisdiction for me. Well, that's all fine and dandy if we're delivering mail. Zip codes are great for mail delivery, not necessarily great when it comes to sales and use tax jurisdictions. I think of my old house in Georgia, Swanee, Georgia 30024, happens to be in multiple counties with different rates. But if you look at a street level address, I can identify that jurisdiction. Here's a picture of what Colorado looks like. And if you look at this, you can see there's multiple zip codes, but each of those different colors are different taxing jurisdictions. And how the heck do you know based on a zip code? So not only do we have this nexus piece that I've got to figure out when I've created nexus and all of the different sales channels that I have, and then once I've figured out nexus, how the heck do I charge tax on my products and what's taxable and what's not? Then lastly, I've got this jurisdiction assignment and I've got to figure out all of these tax rates. And that is the complexity even before we touch the tax returns. So Ashley, let's go to poll number 2.
All right. The second poll question should be on your screen now. If it is not, just try refreshing really quick and it should pop up. And the question is, what is the biggest challenge your company faces with sales tax returns? Keeping up with changing tax laws, managing multi-state returns, avoiding penalties and late filings, or reconciling data? So
Oh, that reconciling data, that is something that I hold near and dear to my heart. I love a good reconciliation. Now, this one is another one that I'm curious to see the results of.
Okay, let's go over to the results.
Oh, wow. Look, this is almost a dead heat between keeping up with the changing tax laws, the multi-state returns, and reconciling data. That is really interesting. Yeah, managing those multi-state returns, I think that is super hard. And that's what we're going to talk about next. But keeping up with those changing tax laws, there's so many people that I know set up Google alerts, and that's how they keep up with all of these tax changes. Interesting.
Great.
All right, let's keep going and let's talk about why filing sales and use tax returns is hard. And I think of 4 big challenges when it comes to filing sales and use tax. Well, this multi-state, and we saw that in the poll question, multi-state filing is pretty complex. We've got data reconciliation issues. We saw that in our poll results as well. There's some pretty strict filing deadlines, but then there's also all of these changing regulations. And you guys hit on almost all 4 of these on where those challenges are. And to me, they're almost as equal to each other. So let's talk about this returns challenge. And I kind of bucket this into several buckets. It's the forms, it's the due dates, it's amending returns, the filing frequencies, the filing methods, notices, prepayments, payment methods, multiple data streams, that reconciliation piece, and then also credits. So we're going to talk about each one of these. So let's talk about the forms first. And Alabama, to me, is probably one of the biggest offenders when it comes to which form do I file. Alabama's got a sales tax return, a seller's use tax return, a consumer use return. They've got city county returns at the state level, at the local levels. And if you happen to register to be a simplified seller in Alabama, you've got yet another return to file. Alabama, to me, is one of the most confusing ones. And there's so many people that are like, seller's use, what is that? Is that what I register for? And then we look at Florida. Florida, if you're a retailer and you've got multiple locations in Florida, every single one of those locations has to file a return. But Florida says, hey, you could file a consolidated return too. But to me, in Florida, the consolidated return is kind of an oxymoron. It's not really a consolidated return. You still have to file every single return for each location, but the consolidated return is like a cover page that summarizes everything. So to me, it's kind of an oxymoron, it being a consolidated return. Missouri, kind of similar to the state of Alabama, where you've got a sales tax return and a use tax return. Louisiana is complicated because it's got all of these parish returns. If we were to think of local returns in states that are complex because of local taxes, I think of Alabama, Colorado, Louisiana right off the bat. And Louisiana, you may have a parish return and then a whole bunch of cities within that parish as well. So which form do you even register for? I haven't even started collecting tax yet, but I need to register. I am just lost as to what I even do. So this registration piece really starts it off of, I don't even know what it is that I'm doing. So sales and use tax can be pretty tricky. Let's talk about the filing frequency. There's monthly, quarterly, semi-annual, annual, occasional. Well, what's a quarter though? And for most of us, we think of a quarter as January, February, March is first quarter. But New York throws a kink in things, and New York says, yeah, those aren't our quarters. For New York, their quarters are December, January, February. They're a month off. So if you're a quarterly filer in New York, it's not the standard quarter that you're used to filing. It's this weird quarter that they've got. And then there's also jurisdictions that change, they're going to change your filing frequency. So as soon as you register, based on the information on your registration form, jurisdictions are assigning your filing frequency. California almost always assigns a quarterly filing frequency to new taxpayers. But after that first year, they're going to come back and say, wow, you really paid an awful lot of tax. We're going to make you a monthly filer. Well, at least making monthly deposits and filing that quarterly return. So based on all of your filing history, states can come back and say, we don't want it annually, now we want it every single month, or we want you to make prepayments. I want you to think of two states that have two different filing frequencies, Hawaii and Michigan. Michigan, if you have been assigned a filing frequency that isn't annual, you have to file two returns. One, let's just say that Michigan's given you a monthly filing frequency. You've got to file that Michigan sales and use tax return every single month. But every single year, you also have to file the annual recap return. So in Michigan, you're not only filing that monthly, quarterly, or semi-annual return, but then you also have to recap your year in yet another return. Hawaii is very similar. You may have a quarterly filing frequency in Hawaii, but every single year you also have to recap all of your sales and the tax that you've reported on an annual return. So those filing frequencies, you're given one, but it may change throughout time based on your sales, based on the tax that you're reporting as well. But let's talk about prepayments. Most new taxpayers aren't required to make prepayments in a state. Prepayments are usually kept for very large taxpayers. And prepayments can be complicated. Illinois makes it somewhat easy because Illinois sends you a letter every quarter that says, here's your prepayments that you need to make, and they give you the dollar amount. But Illinois' prepayments are a little bit tricky because it's not like you make one prepayment in the state of Illinois. In Illinois, you make a prepayment on the 7th, the 15th, the 22nd, the 29th. Florida lets you calculate the prepayment on your own, but it'd be silly if they said, this is how you make the prepayment, or this is how you calculate that prepayment. Florida gives you options. So you could look at 60% of your current month's liability, 60% of the same month prior year, or 60% of your average tax liability for the prior year. But what prior year? Is it the state's fiscal year or is it a calendar year? You got to be careful because missing that and choosing the wrong year could cause you to underpay your prepayments, and then Florida's going to penalize you for it. Texas, this is a little known fun fact, and I love throwing this out for people. The state of Texas never ever requires people to make prepayments. But if you're a really large taxpayer in the state of Texas, and you voluntarily, out of the goodness of your heart, decide that you want to make prepayments, they give you an extra 1.25% discount. So think about this, large retailers that maybe are paying $300,000, $400,000 a month in sales tax to the state of Texas, that could actually pay, the additional 1.25% discount could actually pay for you to outsource the tax returns to somebody else. So it's a little known fun fact about Texas, and I'm on calls every single day with people, and people that are large taxpayers, sometimes I ask them, do you make prepayments in Texas? And they say, oh no, we're not required to. And again, Texas never requires it. Another fun fact about prepayments. When you reach a threshold to make prepayments, the states send a letter typically. But with so many people working from home, that letter that says you don't have to make prepayments may be floating around somewhere in the universe. So you're required to keep up with what those thresholds are. And even if you don't receive a notice, you're still required to make prepayments if you meet those thresholds. So something to keep in mind is, even though you don't get a notice about a filing frequency change or a requirement to make prepayments, you're still required to know when you have to make those changes. Let's talk about multiple data streams. And I think we see this an awful lot more simply because how people are doing business today. In this world of omni-channel, where maybe you're selling online, you're selling through Amazon, but you're also taking orders direct. Or maybe you've acquired a company and rolled it up into yours and they use a different website. And now you've got all of these different data sources that you need to bring together to put the data on tax returns itself. Or maybe you're filing on a retail calendar, a 454, And how are you going to take all of this data that you've got in your general ledger that's on a fiscal filing and put it on a tax return where the states require it based on a calendar month rather than your fiscal month? When I worked for the hotel chain, we used to ask permission from states. Hey, we don't want to file on a monthly basis, meaning a calendar month. We want to use our fiscal periods. And every couple of years, we would go through this process to ask permission from the jurisdictions to file in this manner. So that just adds some of this complexity when it comes to data streams. But I think about what we used to do back in the day when I was in industry of bringing in all of this data into multiple Excel spreadsheets, and then I was having to reconcile it all. Before I ever got to put numbers on a tax return, I had to make sure that I've got every single data stream and all of that data, all of that tax in those data streams matched what was in my general ledger before I ever got to do the tax returns. I put marketplace on here because some folks think about this a little bit differently. Well, if Amazon and eBay and Etsy are taking care of all of these taxes, why do I need to bring those marketplace transactions into my tax returns? And for most states, it really doesn't matter. You report it as sales and then you back it out as a deduction. But I want you to think about a state like Washington. Washington doesn't have an income tax return, or they don't have income tax. They have what's called a business and occupation tax. So although Amazon may be collecting the tax on your behalf and reporting it, Amazon isn't going to pay your income tax for you. So in the state of Washington, if you've reached Nexus in Washington, you're required to report those marketplace transactions on it's called the combined excise tax return. It's not really an excise return, if you will, when it comes to like gasoline and things like that. But on this combined excise tax return, you have to report all of your sales and the sales tax that you've collected. But those gross sales for sales tax purposes also have to be reported on that same return as business and occupation tax. So for those of you selling on marketplaces, please don't forget to include those marketplace sales on your Washington return and report them for business and occupation purposes. The state of Washington right now is on a tirade. They're trying to find people that are selling on marketplaces that have reached Nexus thresholds that are not reporting marketplace transactions for B&O tax. So be on the lookout for that. So to me, this complexity of bringing in multiple data sources, doing this reconciliation, trying to find out from multiple data sources where there may be a variance, and then somehow putting it on a tax return, that's an awful lot of Excel spreadsheets in my mind. So let's talk about due dates. What happens if a due date falls on a weekend or a holiday? Is it due the next business day, or is it due the day before? And my answer for most things is, it depends. But there's also due dates that may be a little bit different if you're filing electronically or if you're required to pay electronically. Florida is the big one that comes to mind. The Florida due date for the sales tax return is the 20th. But if you file electronically and pay electronically, you actually have to initiate it by the 18th because Florida wants their money in hand on the 20th. So due dates, you also have to think about, do they want the return postmarked if you're still mailing returns? Do they want the returns postmarked by the due date, or do they have to have it received by the due date? And we used to have a big spreadsheet that we knew, oh, this return has to be received by it. And we spent an awful lot of money on FedEx making sure that our tax returns were received on time. And even the returns that we took to the post office, we didn't necessarily do certified mail. We used what's called certificates of mailing, but then we had to keep those because that was our proof of timely filing. So due dates aren't necessarily Florida's due on the 20th. It may have to be initiated 2 days beforehand. But what about these filing methods and payment methods? There's an awful lot of states, actually I think every single state now has an electronic filing option. There's some states that require every single taxpayer to file their returns electronically, which makes sense, right? So many states don't want to process paper returns. It's really expensive to process paper returns. So there's some local jurisdictions, I think of Colorado, Louisiana, some jurisdictions in Alabama where they don't have the ability to file electronically, that you've still got to prepare paper returns. Colorado jurisdictions, they do have, some of them have online filing capabilities, but if you utilize their online filing portal, you've got to pay a fee. I don't want to say it's like $1 or $2 that you've got to pay. So keep those fees in mind as well. Larger taxpayers typically are required to file electronically and pay electronically as well. But what about credits? I see this an awful lot, to where you issue somebody a bill, especially those people on accrual basis. They'll issue a bill, they'll charge somebody all of the tax. Because they're on an accrual basis, they've got to file that tax and report that tax to the jurisdiction. And maybe 2 or 3 months later, that customer comes back and says, I forgot to give you my exemption certificate. You technically don't have to give them their tax back. You could say, apply for a refund from the state. Not necessarily the best customer service. So people will issue a refund, they'll credit that invoice, give the customer their money back for that tax, reissue the invoice with 0 tax. But now I've got this tax credit that's sitting out there. Well, a lot of jurisdictions don't want you to file a tax return where the entire return is less than 0, or that the city of Houston tax is less than 0. They just don't want you to file those returns where credits are on them. So what do you do with those credits? Well, now I've got to carry them forward, and I've got to pay attention to when that credit originated, because I don't want the statute of limitations to run. Now I've got this challenge of, how am I managing all of these credits that I'm carrying forward month after month? And what we used to do way back when was we would claim these local credits as soon as we could. But sometimes those local credits were used after the state credit was used. So now I've got this disparate invoice, a credit invoice, where I took a credit in January on the state return, but on the local return in Alabama, I didn't take the credit for a couple months later. Imagine what happens when an auditor comes in and you're trying to figure out, why did I take this credit here and not here? That it's just so complicated. Credit memos can be super tricky. I tell everybody, hey, use that entire credit memo as a whole, meaning don't use the state one portion 1 month and the locals another month. Try and use it all in a single month. It makes reconciliation easier and explaining to an auditor what you've done easier. But I also want you guys to remember bad debt. If you're on an accrual basis and you're paying this tax out of your pocket, but a customer never pays their bill and you write off that bill, don't forget to write off that sales tax and reclaim it back from the state. A lot of folks forget to do that, and it's money that you paid out of your pocket. Get your money back if you've written off that bad debt. Sometimes there is a special return. Massachusetts, I know, used to have its own bad debt reclaim form. Others, you would just have a credit transaction that gets netted against other things and you get that money back. Some states you may have to amend the original return where the tax was paid. This is that complexity. You've got to know what each state wants, but please don't forget about that bad debt and reclaiming that bad debt. I've mentioned amending returns a couple times. How do you even amend a return? There's some states that you have to amend it online. Others don't let you amend returns online. You've got to print out the original return that was filed, mark up on that printed return copy what you're amending, and then mail it in. So depends on the jurisdiction how you amend a return. But what do you do with all of those amended returns? What do you do? Are you printing them? Are you saving them? Are you putting them in a folder with the other returns that you filed? And I want to take you back to credits, because technically what's supposed to happen is if you issue a credit memo to a customer, technically you're supposed to amend the return where the tax was originally paid. Now, logistically, think about that. If this happens over and over again, how many times are you going to amend a single return? Hey, this company XYZ, I gave a credit to, let me amend January 2025. Company ABC comes and gives me their exemption certificate. I'm going to re-amend January 2025, and this can keep going on and on and on. Just know that amending returns over and over again sometimes can trigger audits with jurisdictions. So amending returns, how do you amend those returns, and what are you doing to save those returns? So when an auditor comes in and says, show me copies of your returns, you can easily find them. Let's talk about some notices. Please don't ignore notices. You can respond to notices. I'm going to strongly encourage you to make sure that you follow up on those notices. When I worked for the hotel chain, we had gotten a notice for the state of New Jersey that we hadn't filed or paid our return. I made a copy of that return, a copy of the certificate of mailing showing that we filed it on time, and I also gave them a copy of that canceled check. I mailed it off to the state of New Jersey. I didn't think about it again. A couple of months later, I got a phone call from one of our executives from a really large hotel chain asking me to come to a conference room. As you can imagine, nothing good comes from those phone calls. I walk into that conference room, and in that room is our corporate secretary. She tried to buy a house, but the state of New Jersey had put a lien on her personally. And it all had to do with that notice. I sent that notice and all of the backup documentation showing that what we had done was correct, and we filed it and paid it on time, but the state of New Jersey either never received that response or it got lost somewhere in the Department of Revenue. So we had to jump through some hoops to get everything taken care of, pay a fee to have that lien removed so that our corporate secretary could buy a house. And that to me was a lesson a really long time ago, is just because you respond to a notice, please make sure that you follow up and that it's actually processed. If you're filing returns online, you can usually see in that online portal if there's any outstanding obligations, but I strongly encourage you to make sure that you follow up on those. But what happens if you don't answer these notices or you ignore these notices? Well, sales tax, you're acting as a trustee for the states. And I just shared internally at Avalara an article that I read when I was in South Carolina last weekend about a businessman who's facing 5 years in jail because he reported $150,000 in sales tax in 1 year when he had actually collected $700,000. That's called unjust enrichment, and the government does not like that. So don't ignore these notices. Your corporate officers can be held personally responsible. Just remember that story of New Jersey and our corporate secretary not being able to buy her house. But they can also come in and seize your assets. They can lose your liquor license. This hotel chain, the state of Florida, was pretty matter of fact about a 10-cent notice that I had. I had called them and said, can I just tape a dime onto a postcard and send it to you? And they said, no, we don't take cash. And I said, well, can I send somebody from one of our hotels down to the Department of Revenue to pay this? No, you can't do that either. I ended up writing them a check for $50 and sending it to them so that we had a credit on our account because they threatened to take our liquor license. And if you know anything about hotels, hotels make an awful lot of money on the sale of liquor. We recently ran across a customer that wasn't able to renew their business license, and they had a hotel. They couldn't renew their business license because they had an outstanding notice with the state of Illinois. And they ended up having to pay it and then fight that assessment just to be able to get their money back. But they had to pay it to keep their business open. And Illinois, speaking of Illinois, Illinois is also one of those where if they send you a notice and you don't respond, that assessment becomes final. And the only way to change that assessment is if you go to an administrative hearing and you stand before a judge and say, I am so sorry I didn't answer that notice, but here's all of this information and why I think this assessment is wrong. That is so much more time consuming than just answering the notice when you get it. So again, pay attention to notices, but if you're electronic filing, make sure that you look. Usually on that home page, there's a red exclamation point and something indicating that you may have an outstanding balance. Please pay attention to those. I would hate for you to get one of those phone calls to go into a conference room. So all of this manual sales tax is complex. Before this webinar started, Ashley and I were talking how I used to do this back in the day with green bar paper and having to put things in Lotus 1, 2, 3. When we got WYSIWYG, that was a big deal because we could bold and underline things. But we had a team of 12 people that did nothing but manually file sales tax returns. It's time consuming. A CIO that I used to work for said, humans are bad, humans make mistakes. So anything that you're doing manually is error prone. You can cause delays. What happens if the person in accounts payable isn't around to cut that check for you? And there's some pretty hefty penalties. The state of Florida penalizes 10% per month up to 50%. But if you don't file and don't pay, there's a double penalty in there. So we've got another poll question, Ashley.
We do. The third poll question should be on your screen. How much time does your team spend managing sales tax returns each month? We have several options there for you, so you can make your selection and hit submit, and we'll look at the results. And there's someone in the chat that remembers Lotus 1, 2, 3 as well, Christine, so you're not alone.
Nice, nice. I'm going to guess B is the big one on this one. That's my guess. Everybody's going to spend 5 to 15 hours.
Hey, let's see if you're right. We'll give everyone just a couple more seconds to hit the submit button.
While you guys are finishing that, I see some questions in our chat that talks about discounts. And there are a number of states that give you a discount for timely filing and timely paying. And I didn't even talk about this yet, or maybe it's coming up. But these discounts, some of them can be capped, like the state of Florida caps discounts at $30. South Carolina is even trickier. You've got to file separate South Carolina returns for each location. But for your legal entity, you've got an annual discount cap. So somehow you got to keep track of that across all of the returns that you file. Discounts can make it pretty tricky as well. Oh, wow. Less than 5 hours, but yeah. 36 at between 5 and 15 hours. Think of what you could do with 5 to 15 hours back in your day. More than 30 hours. I want to know who those people are and how many returns they're filing. That's an awful lot of time every single month that they're filing. Very interesting. All right, let's keep going. So let's talk about managed returns. So we've talked about this complexity of filing. We've talked about the complexity of economic nexus, of the taxability of items, and then all of this complexity when it comes to returns. And that's really, to me, where Avalara comes in, is we wanted to help people file tax returns easier and be able to make tax calculations easier, less taxing and more relaxing, right? So that's really where Avalara came to be, was we wanted this sales tax piece to be so much easier for people because they need to be able to do more with less in their business. And that's where we've created, and I'm going to share my screen, and I'm going to show Avalara's managed returns in action, if you will. And I'm taking you out here to this Avalara portal. This to me is like the center of the universe. And to us, every single customer that we're going to file returns for has to create a filing calendar. This is where you tell us, this is the return that I want you to file. Here's the filing frequency. Here's the method that I want you to file this. And here's our taxpayer ID number. And here's the first month that I want you to file this return. So this is the initial part of this. You only have to update it when a state says, hey, your filing frequency has changed. And something else to think about, this Avalara portal that we have, this is actually housing all of those transactions from all of those disparate systems that you've got. So maybe you've got information coming from all of these different sites. Everything can go into a single Avalara platform, and it's this Avalara portal. And this Avalara portal will gather data from all of your different systems, take it all together, and based on that filing calendar, we know which tax gets filed on each return. And I want you to think about this like payroll. So many companies outsource payroll now, where you send data to ADP and Paychecks and or whatever it is that you're using for payroll, and they give you reports and they say, here's the amount of tax that you owe for the month, And here it is by state. And in states like Alabama, by return, you send $1 amount to the payroll provider, and they issue the paychecks to all the employees. Well, this is that same concept. We're taking all of these transactions, whether they've been uploaded to the Avalara portal or they came through from some integration, and we're saying, here's how much tax you owe for the month, and by state, right? And there is one transfer of funds to Avalara, and Avalara then files each return and pays each return. You still have to do a journal entry to book that tax payment in your general ledger, but it's one transfer of funds. You still get credit for those timely filing discounts. We still make those prepayments on your behalf, but you now get 5 to 15 hours of your time back. I would strongly recommend that you still reconcile what Avalara is going to report to that general ledger. That reconciliation piece is still so important, but this becomes really easy for you. And you'll notice it says accruing returns. This just means there's a whole bunch of returns that aren't due yet, and we're not asking you to fund those. At the end of the month, all of those electronic filing confirmations, the pro forma returns, the manual returns that we may have taken to the post office, those are all sitting out here on this exact same portal for you as well. But going back to notices, even if you file on time, you pay on time, you may still get a notice. We just ask that you come back out to this Avalara portal, you go into tax notices, you can upload that notice, and that's where you'll be able to see where we are in responding to those notices. Because we're paying them, we're filing them, we've got access to all of that information, and it's our responsibility to make sure that we have filed them on your behalf correctly and timely. So upload those notices to us. You'll be able to see if we spoke to someone on the phone, you'll see notes about that. If we sent a letter, you'll be able to see that as well. And you'll also get an email every single week that shows, here's the status of your notices. So I wanted to give you this visualization of what the returns piece looks like on the Avalara side. So how do we solve all of this? Well, just as I showed you, we're giving you a way to automate this data collection and this validation. We're not having to take data from one place, push a button and send it to returns in another place. Everything comes into one source for tax calculations and for the filing of returns. We're going to give you some accurate tax calculations, so it's going to reduce those errors, no overpayments, no underpayments. You're going to get those timely filing discounts so that you never miss a deadline. The beauty of this is I used to have to schedule my vacations around due dates. I could never go on vacation between the 15th and the 20th of the month because that's when most of the returns were due. Now, by the 5th of the month, you could look at this and say, yep, those are all right. You can approve them. Or if you're already sitting on a beach, you don't even have to go to the Avalara portal to approve them. You forget about it, Avalara approves it on your behalf, and we continue this filing process. And so I want to give you this bird's eye view of the Avalara compliance suite. So we have a tax research tool. I had earlier talked about this Google Alerts, that people set up Google Alerts to figure out when things have changed. When I worked for the paper manufacturer, I got a phone call from one of our executives saying, Christine, we want to buy a new airplane. Here's the parameters on where we could possibly put this airplane. Will you please look to see where the most tax beneficial place is for us to put that airplane? And I spent 2 weeks researching the taxability of airplanes, calling friends of mine that worked for companies that had airplanes, researching the taxability of hangar space, hangar rentals, and only for us to put it at our airport right by the office. But Avalara has created a tax research tool that takes all of the legalese that's out there and puts it into something that's easier for you and I, who are not attorneys, to be able to read. But you can also subscribe to alerts, whether those are alerts of tax rate changes or taxability changes or anything special that's coming out. You can sign up for those alerts. But this tax research and our tax database is really what drives our tax calculation engine. We also have exemption certificate management. Imagine working for a hotel and an auditor comes in and says, I see you didn't charge this guest tax. Why? And I've got to call a hotel and say, hey, do you remember that one guest that stayed for one night 4 years ago? Can you find that piece of paper that he gave you on why you didn't charge him tax? And most times they could never find it. So we almost always paid some kind of an assessment on missing exempt documentation. Avalara's taken our tool and made it a super smart electronic library where you can store images, you can use the data from those exemption certificate images to apply to transactions, but you can also reach out to customers and ask to get new certificates so that they're always up to date. And to me, this is the perfect world. What I needed in the paper manufacturer was I needed to only apply an exemption when I had backup documentation, and that's where our exemption management solution comes into play. And all of these then feed into our tax determination engine. We call it AvaTax, and it's that portal that you saw. It's kind of the magic behind the screen, the Wizard of Oz, to where we can make all of those tax determinations using exemption information, using that tax research information, whether it's from point of sale, it's a billing platform, it's an e-commerce platform, it's an ERP, or if it's an even uploaded data. Our tax determination engine all happens in the same place. And just as I had showed you earlier, we can take all of that information and we can populate it onto those tax returns. You're not having to export it from the tax engine and then putting it onto tax returns. It's all under the same cloud. And we're really trying to meet you where you are. We've got two different offerings for returns. One of them is just managed returns, and one of them is premium returns. There are some returns that are a little bit more complicated that require more information, maybe the Ohio cat return that may fall into premium services. But with managed returns premium, you get access to a dedicated preparer and a single point of contact. So let's talk about a little bit deeper all of these Avalara services. And if we start at the top, we look at you, your business. We know that you are both buying and selling, and we want to be able to help you with both the buying and the selling side. And we do that through our core products. Our core products being exemption certificate management, our tax calculation engine, our tax return and reporting, and then most recently, e-invoicing and live reporting, which right now is a hot topic outside the United States. And all of those things are supported by other products, license management. Imagine working for a hotel when you've got hundreds and thousands of hotels. How do you manage all of those business licenses? Or you've got other types of licenses that you need to manage. You've got a fleet of vehicles. How are you keeping track of the driver's licenses for each of those drivers and the registration renewals of your fleet of vehicles? We've got a tool to help with that. Our tax research tool that I had just spoken about, our item classification, being able to assign the right taxability code to each of those items. We've got a cross-border tool to help with tariffs and duties, a 1099 and W-9 solution. This W-9 piece to me is so intriguing right now with this world of influencers. And I'm so curious every time I talk to companies that use influencers, how are they collecting W-9s and how are they validating taxpayer ID numbers even before the 1099s are due? And then we also have a property tax option. And we do all of these things through a series of integrations, whether that's an integration with an ERP system, an accounting system, your CRM, an e-commerce platform, a marketplace, point of sale systems, billing, recurring revenue platforms, or we've got API that people can build their own integrations into the Avalara service. And then at the base of everything, we've got a number of professional services available to our customers, whether that's doing a sales tax risk assessment and helping you identify where you've created nexus and what your potential exposure is. We've got implementation services. We offer training and support. And then lastly, I had mentioned the Streamlined Sales Tax Project earlier, but Avalara is a certified service provider for all of those member states of the Streamlined Sales Tax Project, which can be a big benefit to our customers because if they meet certain thresholds, those returns don't cost them anything. The states actually compensate Avalara. And then lastly, we do this all through our partner ecosystem. So Avalara has partnered with technology companies, with accounting platforms, and with system integrators. And these people have all built integrations or worked with Avalara for Avalara to build integrations into our tax calculation engine. So regardless of how it is that you are billing your customers, how you're paying accounts payable, how you're calculating consumer use tax, there's probably a way that Avalara can help you. And one more poll question, Ashley.
It's our fourth and final poll question. If you are interested in hearing from an Avalara sales rep on anything that Christine just went over, you can click yes, and we will get in touch with you. So let us know, and I'll pass it back over to you.
Excellent. And these key takeaways that I have for you guys, please be efficient. There are ways that you can consolidate data, file tax returns in a very efficient way. And this helps you reduce risk, right? You don't want to get those phone calls going to a conference room, but also make it scalable. What I'm seeing an awful lot right now is a little bit of contraction where there's a lot of mergers and acquisitions going on. If you're spending 15 to 30 hours or 5 to 15 hours a month today doing tax returns, what happens when you buy another company and you've got a whole other set of tax returns? So look for something that creates efficiency for you, it reduces your risk, but it's also scalable that helps you grow. We've got 4 minutes. 4 minutes left for today.
Yes, time for some questions. So a couple of recent questions as you were going over the product line. A couple of people asked about use tax and if Avalara can help calculate use tax.
We do. We have a consumer use tax product. It is integrated with a number of ERPs, but you can certainly import data there as well. But we do have a consumer use tax function. And I saw there was a secondary question to one of them was, does Avalara handle Washington B&O taxes? Absolutely, we do.
Next question, does Avalara update the system whenever a state updates its tax laws?
Absolutely. So here is the beauty of this, right? When I was in industry, we used to have to go back and call the hotel and say, hey, I need you to update this tax rate or change the taxability of this product in the gift shop. When you've integrated into Avalara, we're doing that all behind the scenes. So think of tax holidays, right? A tax holiday, you've got to call IT and say, shut the tax off from this day to this day, but only these products. Avalara is doing that all in the background. So you're not having to do that research and making those changes. We're systematically doing that. So you don't even see it. It's just happening. You will get alerts in our knowledge center. You could go look at the rates and rules that we're updating every single month, but it's absolutely what we do within our engine.
And I have a topical example. So in our additional resources, we have a link to our Trade and Tariff Tuesdays, where we're going over all the new tariff laws, and we have a team of 300 people who are researching and staying on top of those laws and updating the solution every day, it seems like, with those new laws that are coming out.
Yeah, a lot of activity outside the United States.
Yes. Let's see. We have some questions about how does Avalara Managed Returns handle discounts on returns?
Oh, so when we file a return, we take every discount that is possible to be taken on a tax return for you, and you get the benefit of that. So if you've billed $100, but the state lets you take a $5 discount, we pay $95 for you and ask you to fund $95. Just remember, Avalara is asking you to fund $1 amount. And I had mentioned this journal entry piece. Make sure that you're booking to sales tax payable the gross tax that's being reported, and that discount gets reported to a discount account. What I hear every couple of weeks from a customer, you guys have underpaid our tax. We didn't underpay tax. You didn't book the entry correctly. You didn't book gross tax to sales tax payable. Those discounts need to get reclassed.
Okay. And one last question. What is Avalara's timing on responding to notice uploads in the portal?
So our notices, it depends, my answer for most things. If it is an urgent, maybe there's different statuses that these notices have. If it is an urgent notice, we are jumping on those right away. If it's a notice that you send us that it's for a tax rate change, we're not going to do much with that right away. But if it is a notice of a tax lien, we are jumping on that one, and we've got a team of people that are going to respond to that one ASAP. So it really depends on the notice type and the severity of that notice. Great question, though.
Great. Well, that is all the time we have today. Christine, any final words before I close out?
Well, my final words are the sales tax return piece is kind of the byproduct of everything upstream, from nexus to taxability to exemptions. Everything then flows into the returns piece. So work on getting some efficiency in there and making your job easier. Remember my old CIO, humans are bad, humans make mistakes. If you can automate this and have a tool that's doing this all for you, that makes it so much easier. And you get 5 to 15 hours a month back.
Great. Thanks so much for presenting today, Christine. Just a couple things to close us out. If you qualified for CP credit, you can download your certificate now in the engagement tool on your screen. The certificate will also be sent to you in a post-event email later today if you don't have a chance to download it right now. In that post-event email, we'll also include a link back to this console where you can view the on-demand recording, download the slide deck, and look at the additional resources again. So thank you all for joining, and this concludes today's webinar.
Thanks, everybody.